down from the second half of last year. For more on what all this means about the state of the U.S. economy and what it means for all of your finances, I'm joined by CBS News senior business and tech correspondent Jo-Ling Kent. Jo-Ling, great to have you. So let's first of all talk about what was fueling this growth.
It's all about consumer spending. We saw consumer spending up about 2.3%. That really drove this higher GDP number. So basically, the economists out there, those who are looking at the market, are saying that this was better than expected, driven by consumer spending, but it does still represent a slowdown in the economy overall. It is a downshift, so to speak. But we do also know that government spending at the federal, local, and state levels also drove this GDP number, as well as business investment. Businesses investing back into their infrastructure and building and investing on that front. So overall, the number is better than expected, but still showing, after we've seen some signs of softening in the economy, a relatively strong number. Also, I want to bring up the fact that, look, jobless claims also came in less than expected. So that's also a positive sign to see, Lana.
So positive in the respect people having jobs, that's good. Consumer spending increasing the GDP, though that does nothing for the Fed's fight against inflation. I'm wondering if you could talk to us all about how all of that plays in and whether that means that we're still looking at a possible interest rate cut by the Fed later this year.
Yeah, the Federal Reserve and Chair Jerome Powell, they're looking for a Goldilocks economic situation to cut rates in September. We do have a Fed meeting and a presser next week where we'll be looking for clues from Powell on what actually will happen in September. We don't expect a rate cut at the end of this month, but the market is still pricing in a rate cut for September, which could be good news if you're trying to get, into the housing market. You're looking for a lower mortgage rate, something a little bit more affordable. But what we know so far is we don't expect to see a significant rate cut, maybe a quarter point here. So that is likely to be perhaps the only rate cut we see before the presidential election come November. But essentially, if you look at the overall situation, we have inflation at 3%. Wage growth is still outpacing inflation, which is a positive sign for consumers and spenders and taxpayers, right? But you also have unemployment starting to creep up, sitting at 4.1%. So all of these numbers, while they mean something individually, are going to compose a picture for the Federal Reserve and the FOMC to make an informed decision when it comes to that meeting next week, as well as that very critical meeting where the entire market is looking at the Fed to possibly cut rates in September, Lana.
We will be watching it all, and we know you will.
So there you have it. That's the second quarter of how the economy is. It's just a little boost, but then again, I know for all three of us, we're not going to see a big, boost in the economy. Basically, how the election comes up and everything, and also who's running the countries right now. So, but other than that, Ronnie, what's your take about the second quarter, how the economy is boosting just a little bit, just a little tad bit?
That's really good. When you see the economy start boosting, I mean that's very, very good when it comes to the aspect of the stock market. If someone like myself, Hakeem, and Jordan, if you invest in the stock market, you're gonna also see a little bit boosting when it comes to the aspect of certain company. Amazon, Tesla, you got Disney, you got the Nike, you got McDonald's, you got all these companies that's starting to see a slight boost in this quarter. I mean, consumers are spending their money as they should, and it's boosting on the economy a little bit more. Not only that, even if you have a high yield savings account, you're also going to see a little bit boost as well. There's some high yield savings accounts that are now going up close to 6%, which is really, really good. So if you're seeing those things that's going on right now when the economy is having boost, that's the best time to put your money where you need to put your mouth in, put your money at, so it can grow and then can continue to grow. So even if the economy is going back slightly, you'll still see that boost in a form of increase in your money. That's why I always tell people, don't just let your money sit in the bank. When it's sitting in the bank and not working for you, it's pretty much dead. It's just pretty much dead weight. Put your money to work. Of course, it's not financial advice. I always speak to a financial advisor. Everything we're saying are pretty much opinion based, but still put your money to work. Don't just leave it in the bank. Shout out to D and also shout out to Care 504. It's also in the building. Go ahead, Akeem.
Brother, you eloquently said it. All I'm gonna just add on to this. This is not financial advice. Get educated on investment. You know what I mean? You get prepared when times are good and you relax when times are hard. It might seem an oxymoron, but if we was looking at this and say, hey, inflation is coming, we would have started getting rid of stuff that didn't make sense and start investing in things that. And but there's another thing too. Bitcoin is going up. Bitcoin is going up. I'm not recommending. I'm just saying, there's diversify your portfolio.
Yeah, facts on that. Yeah, stocks are looking really, really good so far. So hopefully get a boost on that. Crypto is really looking good so far with that. I believe inflations are subsided just a little bit. So we see a little bit downwards of inflation as well. So it's good to see, economy's doing good, more, a little bit more spending, because spending is good for our economy, especially here in the United States and everything. So, other than that, hopefully we continue to see a little bit more growth into it, because, if you see more growth into the economy, it's better for us as people of the United States and America. That's my take on that.